Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A massive start to the week, the deal we've all been waiting for. IREN officially inks a $9.7 billion contract with none other than Microsoft. We're going to be breaking that deal down in today's podcast. Before we get into it, take a second, smash the like button, guys. Anthony absolutely loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of IREN and what you think about this monumental deal. With that being said, let's get into today's podcast. All right, guys, Monday morning, away we go. This is the day we've been waiting for. We have Cypher earnings coming out, but lo and behold, IREN seems to have beat them to the punch, announcing a massive deal in the sector. We're going to be covering the highlights of that. IREN shares themselves up substantially pre-market. I saw in excess of 20%. Really the go-ahead deal for the sector.
Yeah, absolutely. This is big news today for IREN. We've been waiting for it for a long time. And on first view, we've not had too long to go through this. This come out literally in the last hour or two ago there. So we're getting this podcast out early today to give you an understanding of what's really happened there. So in terms of this deal today, it's a big deal. It's got a big hyperscaler. Microsoft don't come much bigger than Microsoft. And what it does, it highlights for me is this highlights exactly what Dan said in the previous podcast about, they don't necessarily have to go co-location. They can do it themselves. And this looks like exactly what they're going to do, Bryce.
Yeah, it certainly does. So if we bring up the slide deck, I gotta say I love these presentations as the deals are announced. You can see $9.7 billion contract with Microsoft. It's a 5-year term, so quite a bit shorter than what we've seen, the typical 10, 12-year plus maybe 2 5-year extensions, 20% prepayment. So that's a significant amount of money. And the final point here, only 200 megawatts of data center IT load. So when you look at the numbers here, Anthony, compared to some of these other co-location deals, shorter duration, less megawatts, but a higher price tag. I'll let you dig into exactly why that is.
Yeah, and just be careful on that there because the devil's in the detail, Bryce. And as I said before, this isn't a co-location deal. This is a deal whereby IREN are building the facilities and buying the GPUs to go in them facilities. And they've put in the next slide how much they're going to spend on GPUs, CapEx, and including any ancillary costs as well. And that's going to be 5.8 billion. So straight away, that 9.7 billion you could reduce to 5.8 from that over the contract period there. And the assumption there would be that the GPUs last 5 years. Now, obviously, we're not certain how long GPUs last for because AI's not been around, that long. And these GPUs are a new iteration. These are the NVIDIA GB300 GPUs. Remember, when IREN started, it was the H100 GPUs, and they have been using those over the last couple of years. But they're still in use there, and you see now companies using more advanced GPUs to go forward. In terms of, an analogy, it's like looking at the Bitcoin miners. The Bitcoin miners, years and years ago, S9s went to S17s, to S19s, to S21s, to S23s. Every few years, the big suppliers of machines bring out the latest model. And you're going to see this with GPUs. Now, if my expectation, if they can let those GPUs last the full 5 years of this contract there, then you can say the balance of the 9.7 is around about 3.9 billion over 5 years, which is, a significant amount. The prepayment, you're quite right, Bryce. This is very similar in terms of, help towards paying some of that cost that they're going to incur in the same way that Core Scientific received prepayments from CoreWeave up to, I think it was $750 million. And IREN have also received, 20% prepayment there. So that's going to be help there. 200 megawatts of data centers. Well, that fits quite nicely into what they're doing at Childress at the moment. Remember, we talked about Horizon 1, Horizon 2. They're going to have 2 more data centers there, Horizon 3 and 4, to fulfill this contract, Bryce.
Yeah, we'll get into some of these renderings. These site pictures are just incredible what they're building. Now, interesting to me, you see that 85% estimated EBITDA margin. Some of these other slides were ROI. So now that we've had a few of these different type of deals in the market, we're really able to kind of compare and contrast. And that's what Jason talked about on his podcast. There's a lot of creativity in terms of the deal structure here. Microsoft not receiving any equity in IREN either. I wanted to kind of get your opinion on the landscape as a whole, Anthony, really becoming quite creative in terms of what we're seeing.
Yeah, and EBITDA is an accounting metric, earnings before interest, tax, depreciation, amortization. So this is literally all the sort of like the cash costs that are involved in delivering that project there. So what they're saying is, of the 1.94 billion they'll receive annually, only 15% will go on things like wages, running cost, operational costs there. Now, the key thing to remember here is the thing that's not including that 85% is the cost of the GPUs. And, for all you out there, when you're buying 5.8 billion of GPUs, you can't ignore that cost. Yes, it's not, an accounting cash cost, but it is a true cost to the organization. And those machines will depreciate over the length of the contract there. And if they're using a 5-year term, you're looking at something like maybe $1.2 billion of depreciation each year that will go through the accounts. Now, that still gives them, based on this here, it still gives them a healthy profit based on that first 200 megawatts. So maybe, when I have more time to go through and probably in the next few days put together something that I liked, what the benefit is post paying for the GPUs, and then doing a comparison with the other deals, this might still stack up as a really, really good deal. But I don't want people to think that, if you're going to spend nearly $6 billion on GPUs, it's not a true cost. It 100% is a true cost, along with all those other non-cash costs that aren't included in that position there. What we want to see is we want to see these companies going into the high performance compute era, delivering net profits once all the costs are incurred, not just the cash costs. That would be showing you then that these are really profitable companies. If you go to Amazon, Microsoft, all the Mag 7, they are all delivering profits, including all the costs. And we want the miners to do exactly the same, Bryce.
Yeah, we certainly do. And I was going to say these may be the next round of Mag 7 if we hold on to them long enough. Now, we are seeing the Bitcoin miners really change this narrative. A lot of people said, hey, Bitcoin mining is bad for the environment. They proved that wrong. They said, hey, HPC AI data centers are fundamentally different than Bitcoin mining. You won't be able to do that. They've proved that wrong. You're not going to be able to sign hyperscalers. We've seen an abundance now of hyperscalers sign into this space. And then they said, well, Texas isn't going to work for this kind of stuff. It's too hot. The PUE is too high. Now we've seen this again. You look at their renderings of the Childress facility here, immediate expansion potential. You look at some of these drawings, Anthony, these are absolutely massive facilities, you guys. A gigawatt supports a city up. A gigawatt is the amount of power that a general city can consume. So the fact that these companies are now putting data centers up, consuming this amount of power, and signing these type of clients are really quite impressive.
Yeah, the renderings do look really good at the Children's site there. You can also see Horizon 1 construction progress as well from their presentation slide there. That's really come on. And remember, Dan said, Horizon 1 expected to become operational or energized by the end of the year. So a couple of months left to deliver that there. But you know what? They've delivered every sort of like target in the last few years that they've put out there. And who's going to turn around and say they're not going to deliver the next target? I do like the expansion potential at Childress. And remember, we asked Dan this very, very question. If the right contract came in with the right ROI, would you be prepared to move mining out of Childress and relocate it elsewhere, or just continue straight with high performance compute as your main strategy going forward? And he said, absolutely. They are delivering power on a large scale, and they want the best return on investment for their power. And this contract clearly shows this is the way forward. It is a really, really good contract on first viewing. And, as I say, we've not had a great deal of time. We want to make sure that everybody out there understands what's happened today. This is a really big, big day for many reasons. And IREN have set the ball rolling straight away out of the traps first thing this morning with this great update. Now, I do like the expansion plan there. There's an additional maybe 6 more buildings to be completed at Childress there. That takes the total up there to using that 750 megawatts of available power out there, delivering HPC. And not too far away from the Childress site, they've got the Sweetwater site there. And that's, in excess of another 2 gigawatts of power available there for the future. So they've really got this plan in place to deliver. And we're just seeing the start of it now. 200 megawatts to start of, but they've got nearly 3 gigawatts of power on the books at the moment being developed. Not pipeline, being developed. And that's the difference. A lot of companies will say we've got a pipeline. Well, a pipeline is an aspirational number, but this is developed land that they are currently working on now. And we know that Sweetwater 1 will get energized in 2026, according to the timetable. And Sweetwater 2 will be the following year, 2027. And if you think about it, when you're talking about the amount of cost to deliver just 200 megawatts, we're talking about just the GPUs itself, nearly $6 billion. And then you're looking at data centers that are going to cost $9 to $11 million per megawatt to deliver those data centers. Put those numbers together there, and you know that you have to have a stage plan, because there's no way you can sort of really, without significant amounts of capital, you're going to have to plan that growth all the way through as you deliver. But you know what? They've got a really long delivery line to meet there, and they've got so many opportunities how they want to deliver that line there. This first part of the plan is they're going to do it in-house, and they've been doing in-house in Prince George over the last year or so. So they know they can deliver that type of model. We'll see what happens in the future with regards to the other sites, whether they carry on doing their own in-house GPUs, or whether they think in the future, actually, for certain sites, co-location could be a good alternative.
Yeah, just incredible, the site progress. It would sure be something to see, Anthony. We'll have to make our way down there one day. However, I did want to comment on the pipeline you just mentioned. When you look at this, they've already got Microsoft Together AI, Fluid Stack. We've talked about that NVIDIA preferred partner status, so really putting them at the front of the line. Some leasing opportunities with the GPUs as well. But as you just alluded to, this is a monumental deal, but really just scratching the surface of where we think not only IREN, but the entire sector is going.
Just starting. And if you see there on the slide there, which you've kindly put in the on the screen, you can see that 2.5 billion ARR based on 350 megawatts. Well, they've got nearly 9 times more size than that to grow out. And if you do the numbers there, you're going to be in sort of like 23 to 25 billion dollars of annualized revenue. That's a big change from some of the revenue streams that Bitcoin mining has brought some of these traditional mining companies in the past. They're no longer mining companies. These are, data center companies that deliver power for the best rate of return.
They certainly do. And make sure you guys check out the website as well, powermininganalysis.com. We have a specific tab for each one of these miners, including IREN, all the latest news. Now, this is a monumental deal, but it's not the only one today. Cypher came out with Q3 earnings. They announced a massive deal with Amazon as well. We've got some big news out from Hive. We're going to be covering all of that in subsequent videos, but we needed to get this one off the press bright and early for you. So let us know below, are you holding IREN? What do you think of this deal? And what is your go forward outlook for this company? Hit the like button. Feel free to subscribe. We'll see you back here shortly.